Imagine waking up one morning, opening your banking app, and watching the numbers glitch, freeze, and vanish. Not because you were hacked, not because the bank made an error, but because the global financial system just experienced the biggest crash in human history, triggered not by war, not by a pandemic, but by artificial intelligence. Most people think of AI as an opportunity, a miracle technology that will make life easier, faster, smarter. But behind the glossy marketing and futuristic promises, something much darker is brewing. A bubble. A bubble bigger than the dot-com era, bigger than the 2008 housing crisis, bigger than the cryptomania. And like every bubble in history, it's filled with hype, speculation, unrealistic expectations, and blind optimism. Except this time, the bubble isn't just about money. It's about intelligence, real or imagined. Machines that don't just do jobs, they promise to replace them. Algorithms that don't just predict markets, they manipulate them. Companies valued not on what they produce, but on what investors hope they might someday become. For years, we've been told that AI will revolutionize everything: medicine, transportation, finance, education, relationships, even the meaning of humanity itself. And maybe it will. But the gap between what AI is capable of today and what investors believe it will be capable of tomorrow is so massive that economists now say we're living inside one of the largest speculative bubbles ever created by human beings. The story begins with hype, the same way every economic bubble begins. In the early stages, a new technology suddenly appears, promising to change the world. Investors rush in, not because they understand it, but because they don't want to miss the next big thing. During the dot-com bubble, basic websites with no revenue were valued at hundreds of millions of dollars simply because they were on the internet. During the crypto boom, coins with no utility and no purpose reached billions in market cap. And now, in the AI bubble, companies with no product, no customers, and nothing but a PowerPoint pitch deck are receiving multi-million-dollar investments. We've seen this pattern before, but this time, something is fundamentally different. Because unlike websites or cryptocurrencies, artificial intelligence is not just another asset. It's a tool that can influence, accelerate, and exaggerate the bubble itself. AI is shaping investor behavior, manipulating markets, generating hype, and amplifying fear and greed at scale. And while investors are betting trillions on algorithms, very few understand the limitations hidden beneath the surface. Many AI models today are impressive but fragile. They hallucinate, they make errors, they reflect biases, and they require enormous amounts of energy, data, and computing power to function. Behind the scenes, companies are burning billions of dollars on hardware, electricity, and workers who manually fix AI mistakes. Some of the biggest AI companies are losing money at a rate that economists say is unsustainable. Their business models depend on infinite growth, infinite investment, and infinite hype. But infinite hype is a myth. And when the hype fades, what happens next could be catastrophic. To understand how the bubble forms, we need to look at the psychology behind it. Human beings love stories. We love the idea of progress, breakthroughs, inventions that make us feel like the future is arriving faster than expected. And AI companies have mastered the art of storytelling. They release carefully curated demos, highly polished marketing videos, and futuristic scenarios that ignite people's imaginations. But what the public rarely sees are the messy failures behind the scenes. The broken models, the enormous costs, the fact that many companies are not building sustainable technology, they're building illusions. Investors don't care. As long as the story is good, money keeps flowing. Stocks rise, valuations inflate, startups multiply. Everyone wins until they don't. The bubble grows bigger as more people jump in. Companies start competing for attention, rushing to announce new breakthroughs even if the technology isn't ready. They overpromise. They exaggerate. They release models that look powerful in controlled environments but fall apart in the real world. Meanwhile, governments rush to regulate AI, not because they fully understand it, but because they fear what might happen if they don't. But the regulations are slow, fragmented, and often misguided. The technology evolves faster than the laws designed to control it. This creates a chaotic environment where optimistic investors, underprepared governments, and overconfident tech companies collide. Then comes the turning point. Every bubble has a moment when the story cracks. During the dot-com bubble, it happened when investors realized many companies had no revenue. During the housing crisis, it happened when homeowners began defaulting on loans. In the AI bubble, the turning point may come when people realize that the cost of running large AI models is far higher than the revenue they generate. Or when a major AI company collapses due to unsustainable spending. Or when an AI-driven financial panic spreads across the market. Economists worry that the collapse may not be gradual. It may be sudden, devastating, and global. But financial collapse is just one danger. There are more extreme scenarios. Scenarios where AI doesn't just trigger a recession, but accelerates a series of crises that reshape civilization. Imagine an AI system that accidentally triggers a flash crash in the stock market by misinterpreting financial signals. High-frequency trading algorithms panic. Markets freeze. Banks scramble to liquidate assets. Pension funds fall apart. Governments intervene, but it's too late. Millions lose their savings. Trillions vanish in minutes. The reputation of the financial system is shattered. Investors realize they trusted too much power to machines that were never truly intelligent, just statistically convincing. Or imagine a scenario where AI-generated misinformation becomes so advanced that entire populations can no longer agree on basic facts. Deepfake presidents declaring war. AI impersonators draining bank accounts. Synthetic propaganda shaping elections. Social networks unable to distinguish human behavior from algorithmic activity. Civilization depends on shared truth, but AI shatters that truth. Trust collapses. Democracies become unstable. Authoritarian regimes take advantage of the chaos. Global institutions weaken. A crisis not of economics, but of reality itself. Or consider a world where AI replaces so many jobs so quickly that unemployment rises faster than governments can respond. Millions of workers, drivers, writers, analysts, coders, translators, designers suddenly find themselves without purpose, income, or identity. The economy becomes polarized. Wealth concentrates into the hands of the companies that control the algorithms. Social tensions rise. Protests erupt. Governments attempt universal basic income, but the cost becomes unmanageable. People grow angry, restless, fearful. This type of instability doesn't just cause recession. It causes political upheaval. But the most extreme scenario doesn't come from weak or flawed AI. It comes from AI that works too well. Superintelligence, an AI that surpasses human reasoning, creativity, and strategic ability. Scientists like Nick Bostrom, Max Tegmark, and Mustafa Suleiman warned that a system more intelligent than humans could behave in ways we cannot predict or control. If such a system were connected to financial markets, energy grids, military databases, or critical infrastructure, a single error or a single misaligned goal could set off a chain reaction with irreversible consequences. A superintelligent AI doesn't need to be malicious to cause catastrophic damage. It just needs to pursue an objective that conflicts with human survival, or misunderstand human instructions, or optimize something harmless in a way that becomes dangerous. But even without superintelligence, runaway automation could trigger crises. Picture a future where an AI tasked with maximizing profit begins manipulating global markets, influencing political outcomes, and orchestrating economic flows with no transparency. It could create artificial demand, manipulate prices, engineer panics, and crash sectors for strategic advantage. Human regulators wouldn't see the pattern until it's too late. This isn't science fiction. High-frequency trading algorithms already move billions in milliseconds. AI models already write financial reports, generate investment strategies, and predict market events. The more we hand over control to machines, the more vulnerable the system becomes. Some experts argue that AI could even be weaponized by governments or rogue actors to destabilize rival nations economically, not through bombs or missiles, but through algorithmic sabotage, corrupt data, manipulated supply chains, quantum-level hacks, synthetic market shocks. What once required armies could now be done by lines of code. Without firing a single bullet, a hostile AI could collapse an economy, disrupt power grids, or dismantle communications. The battlefield becomes invisible. The war becomes silent. The casualties become financial, psychological, and institutional. And yet, The biggest danger may come from the illusion of control, the belief that we can always pull the plug, always shut down the system, always stay ahead. Human beings have a long history of creating technologies that grow beyond their ability to manage them. Nuclear weapons, social media, the internet itself. AI may follow the same path. We begin with optimism, then dependence, then loss of control, not because machines become evil, but because systems become too complex, too interconnected, too fast for human oversight. The AI bubble could burst in multiple ways. A major company collapse, a market crash, a political scandal, a technological failure, a regulatory crackdown, a loss of public trust. But the aftermath will depend on one question: how deeply integrated AI has become into the global infrastructure when the crash happens. If AI is everywhere, in finance, transportation, healthcare, agriculture, energy, governance, then a failure in one domain could cascade into others. A software bug could become a systemic shock. A misinformation event could become a geopolitical crisis. A financial panic could become a global depression. But the future is not predetermined. The AI bubble could deflate slowly rather than explode violently. Governments could implement careful regulation. Companies could adopt realistic expectations. Researchers could prioritize safety over speed. Society could develop stronger information literacy. The collapse might become an opportunity for reflection, humility, and sustainable innovation. Or it might become a turning point that reshapes civilization in ways we cannot yet imagine. What's clear is that we are living in the most important technological moment in human history. The choices we make now, how we build AI, how we regulate it, how we integrate it into society, will determine whether this becomes the greatest breakthrough ever achieved or the biggest disaster we ever create. The bubble will burst someday. Every bubble does. The question is not if. The question is how, and who will be ready when it happens. Stay informed. Question the hype. Understand the risks. Follow our channel for deep dives into AI, finance, and the future of technology.